It is Financial Literacy Month, as we have been talking about, and welcome back to the show, everybody. Certainly, and a part of Financial Literacy Month, what did we cover so far? We
talked about self-employment, and we really talked about keeping Financial Literacy Month going all year long.
Yes, that's right.
Which we'll obviously talk about some more.
Yeah, and we got into income. We talked a lot about
talked about income,
right.
And I think later in the show we'll talk about assets, but we really want to talk about right now
credit.
That's it's
right.
so important.
It's so important. So first off, how do people know? I guess when a credit, you've promoted these apps a lot that people can check these. They're free apps. 2 of them, I do believe, right? That you suggest people.
There are
download?
2 really easy apps to download.
Yeah.
You can download them from the Apple App Store or the Google Play. Borrowwell and Credit Karma. Borrowwell is tied onto and brings in the data from Equifax.
Right.
And Credit Karma brings in the data from TransUnion. They're both free apps. So prepare yourselves. You're going to be sold.
Mm-hmm.
They're going to try to sell you a credit card or sell you a loan, but just use their data. Use their credit monitoring for free. If you'd prefer not to get ads, you can go on Equifax and you can go on TransUnion and you can sign up for both of their credit monitoring services. Mm-hmm. Or you can just check your credit once, whatever you want to do. Yeah. But these type of things come with a cost.
Right.
The reason I'm promoting, Borrowwell and Credit Karma, they don't give me anything. This is not a paid advertisement, but it's free. So sometimes people are willing to get a little bit of ads, to get something for free. Mm-hmm. I personally have them on my phone. I get the alerts all the time. I get the emails saying, you're doing a good job, thumbs up. Mm-hmm. And, they will come to you to be like, ooh, there's something you can do better. And I like getting the feedback. It holds me accountable. Mm-hmm. Even though I know my credit's good, I monitor it. I've had Equifax, I've had TransUnion, I've done mortgage lending. I know the theories of what you should do. It's almost like someone holding you accountable. Mm-hmm. Because they'll send you an email to be like, oh, don't take your eye off the trigger or whatever, or don't take your foot off the gas, something funny like that. And it's a great way to be held accountable. I typically go in and I do a class every couple months. There's a high school that they want to have me in, and we talk about financial literacy. We talk about things like credit and income and mortgage lending and all kinds of great things. And so I'll give a shout out to Miss Jodry. She had me into her class for years, being a guest and talking about things like this. Mm-hmm. And we really like starting these kids at 17, 18 years old. They're just about going to get a credit card, you know what I mean? Mm-hmm. And just what does credit look like and why you should build it. A lot of kids are scared of credit. Like, oh, I don't want that. I don't want to rack up a credit card. Mm-hmm. And it's really good to start and, start building.
Okay, how much information do you have to give these companies? Because some people are reluctant to give social insurance numbers and on.
You have to give it all, pretty much.
You do.
Yeah.
So there are security concerns because there are companies that can mimic other companies.
Of
so
course.
You can go on and so and I will be honest. I'm hesitant when it comes to this type of thing because I'm concerned that am I giving the right company my information? What can I trust? So what tips do you have for people here?
Well, I think that if you're going to download these apps, make sure it's the right app that you're going to download.
How do you know?
Well, I think there's only one Borrowwell on the App Store, and there's only one Credit Karma on the App Store. So make sure it's those right apps. Maybe what you need to do is you need to Google it first, make sure it's the right one, then go from the website onto the App Store. That's a good way to do it. But if you're more comfortable going to the actual credit reporting agency themselves, go to TransUnion, go to Equifax. It will come with some cost, but at least you're on the right site.
Right, yeah. So what type of cost are we talking?
I think if you're going to do monthly monitoring, it's like $20, $30 a month.
Is that right? Well, that's kind of
per credit bureau.
That's a little bit pricey, yeah.
That's times pricey. 2.
Yeah.
And it's important not just to do one. You really need to do Borrowwell and Credit Karma. The data that they have is sometimes different. Yeah. With Credit Karma, the good stuff stays on forever. Mm-hmm. So that is TransUnion. TransUnion, good things never fall off. Mm-hmm. With Equifax, which uses Borrowwell, Equifax, the good stuff falls off 6 years after you have a closed account.
Right.
So they can look very, very different. Some creditors will use TransUnion. Some creditors will use Equifax. So it's really important to keep an eye on both.
Okay.
Especially if you're planning on doing a big transaction.
Right. So what would you say the average of your clients are using these apps? How many people? I know it's kind of hard.
I would say less than 50%.
Less than 50, yeah. Yeah, that's right. So the big advantage, obviously, is that if people are using credit on your behalf nefariously, and you're not, you become cognizant.
Yeah,
of
I
it,
think
right?
like if there is any, identity theft, you can pick that up really quick. Or if you mess something up, you can find out. I think that's really, really important.
Right.
And I'll bring it back to accountability.
Yeah.
It's really hard for an individual to be accountable to anyone but themselves. But I think if there's an app telling you to be like, oh, you could have done this better, or you need to do this, it will give you some feedback. It's like that sounding board. And on average, the people that download these credit monitoring apps improve their credit. Even if they have good credit, they still improve it.
Right.
Because they're taking the tips and tricks from these apps and actioning them in reality.
Yeah. So what is good credit? What's the number? We hear anything like over 700 is not bad, eh?
So they're both out of 900. So 900 would technically be a great score. And, sometimes we say 900 is a unicorn. I've seen it. It does exist. You can believe it or you can't believe, whatever. Anything like over 720, 730, 740 is excellent credit. When we start getting this down in the 600s, we start asking some more questions. Is there high utilization? Has there been missed payments? Has there been a previous bankruptcy or a consumer proposal? Is there a collection or a judgment? Are people, higher over limit? There's so many things that can bring down people's credit. And credit's really made up of a mix of how you're paying your credit, your utilization, so the balance compared to the limit, the type of credit that you have. Is a credit all from, B lenders like Fairstone and stuff like that, or is it a bunch of like credit unions and bank lenders? And having that type of mix is really, really important. And it also looks at revolving versus installment payments. So, do you have all credit cards? Do you have all loans? Or do you have a mix? And the perfect amount of credit is credit that's been around for a long time, some revolving, some installment, all very low on the balance compared to the limit, and you making your payments on time. That's the recipe of good credit. And if you're trying to build your credit, we always say the 2-2-2 rule is what you need to follow. 2 pieces of credit, a minimum of $2,000 for a minimum of 2 years. And that is typically the recipe to at least have good credit or to start rebuilding your
You're saying
credit.
carrying a balance of $2,000?
A limit of $2,000.
Yeah. Why carrying a balance? Why is that advantageous?
Well, not necessarily carrying a balance is important. So a limit of $2,000 is what you want.
Yeah.
But you never want to go above 30% of the limit, or it will start bringing your score down.
Right. Yeah. Absolutely. Yeah. Okay. So how long does it take for people to repair credit?
It depends.
Yeah.
I always say this depends. Sometimes people can fix their credit overnight. I've seen people with terrible scores, like in the 500s, that have been able to go from like 500 to 700 in the span of like 2 months.
How?
Their credit was actually not that bad at 500. It was all driven by utilization. They had several trade lines, credit card, line of credit, all over or at limit.
Wow.
They came into some cash. They paid it down, waited for those all to report on the credit bureau. Good credit. They'd never missed a payment, but their credit was low due to utilization.
Yeah.
And that's what I look at. When we pull a credit bureau, the first thing I'm looking at is, the score is important, but I start looking at seeing how thick the credit bureau is. How is the utilization? How is the repayment? Are there any collections or judgments? Things like that. Has there been a bankruptcy or a consumer proposal? The score is not the only thing. Because guess what? A kid that's 19 years old could have perfect credit. But someone who's 50 years old who's had credit for 30 years might have a lower score, but their credit actually is much stronger. And we look at that every time.
Yeah. So what's the best way for young people to establish credit?
I think getting a credit card is the very first step.
Right.
I would venture to say...
Should they use it?
I would say definitely use it.
Yeah.
Use it for your groceries. Use it for your gas. Use it for everything you can spend.
And pay it off.
And make sure you pay it off every month.
Yeah.
But when that statement generates, listen to me. When that statement generates, never let the balance be higher than 30% of the limit. So if your spending throughout the month is more, make a payment before the statement generates, and that will ensure that your credit will be stronger when that reports.
I see. Yeah, that's a common mistake, I would think. If people probably think as long as
I pay it off every month.
Pay it off every month.
But if you're at limit every month and pay it off, at limit every month, pay it
Yeah.
off, that is going to bring your score down.
Yeah, that's right. Yeah, exactly.
You are the only one that can control your credit. Open your mail, know what you owe, make your payments regular, automatic, and on time.
Yeah.
And really keep your balances as low as they can. If your balances get high, look at potentially like repositioning it, a consolidation loan, a line of credit that can help, and just pay down.
And the good news is we got another segment to talk about some other things.
I can't wait. We're going to talk about assets and how you can build your net worth.
All right. Mortgage 101, your guide to homeownership. We will be right back.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.